The World Bank, in its India development update, has said that it expects India's growth to moderate to 6.3% in FY24 from over 7% in FY23, but will continue to be one of the world's fastest growing economies. Parikshit Luthara, our colleague, is right here with all the details of this report. Parikshit, tell us.
Well, the World Bank in its latest India development update has said that, yes, growth will moderate to 6.3% in this fiscal compared to 7.2% in FY23. And this is largely due to a very high base effect last year, which we will see waning. Slowing down of global growth, slowdown in China will be a major factor. Domestic price pressures as well. When it comes to inflation, the bank noted that headline inflation is expected to average around 5.9% in FY24. And this is on account of elevated food prices and oil prices as well. Fiscal deficit is expected to decline to 8.7% in FY24 from 9% of GDP in FY23. When it came to fiscal consolidation, the World Bank country director said that they do not expect the government to deviate from their path of fiscal consolidation due to election spending, and they're not accounting for any slippages in their outlook. However, the report does point out that fiscal consolidation could be delayed by subsidy programs which are being launched by the government to limit the impact of high food prices ahead of general elections in 2024. The bank also believes that there is a need for greater public-private partnerships and crowding in investments to encourage the private sector to invest more, and greater investments from private sector will be a key for the future. So they are really recommending a higher scale and more active consideration of public-private partnerships to attract more capital spending in the future.
All right, Parikshit, thanks a lot for getting us all of those details on what the World Bank has to say on India. In fact, let's